Hi guys, today I will show you weekly chart of Euro US dollar pair. Now the thing that I wanted to show you is on the weekly chart it's far more powerful to trade. It makes you more money and it is easier to trade in terms of candlestick chart. Example, right here you can see this green candle have like eaten all of this candle. Number one thing. But this brings a dangerous phase. Why? Because it's not directly eating it. It took many days, many weeks, 1 week, 2 week, 3 week, and then fourth week to cross it. That's not a good sign. So we will wait. Now this is a red candle, right? Now second red candle and third, boom. This is an engulfing bullish candle, which has it eats them both. So we can easily buy it here. Now you could have bought it here as well. But the point is to trade on the easy terms rather than risking it out. Now this is also an important phase because it will usually happen that it will go down and make a green small candle and then again go down. So you have the right or the option to either put a stop loss on this big green candle or to sell on this red candle. I won't sell. Reason? Because 1, 2, 3, 4, 5, 6, 7 weeks and it hasn't crossed this low. This means someone is trying to give an impression that market is falling and in the meanwhile accumulating Euro US dollar pair. Now if you look at it further, boom, it goes up. Dark cloud cover and boom, it goes up. Now the point of view is this green candle. It was so heavy that no one was willing to cross it on the downside. And that's an important phase. Because usually what really happens is, example here, this is the opposite example, but you will relate to it. This was a big red candle, right? It tried to go up and crossed within the next 2 days. But then it certainly fell off and followed this red candle. The same goes here. This was a green candle. It took many weeks just to achieve its close and then it went up. Now the concept is to understand how sharp the rally, the reverse rally is. If it is sharper and then right at the top it fails, then there is some serious problem. Example, right here it achieved the highest point. This was the highest point and it crossed that, but it didn't went higher. It collapsed after that. Right here it did fell off, achieved the the open right here, but didn't went lower. So this is a sign that buyers are the king. And as you can see, the price rises up. And now this last red candle tells us that it's a selling time. Why? Because first of all, it's an engulfing bearish candle and it eats this good green candle. So it tells us there is something definitely wrong. Second, once we bought it here, the price was somewhat in a box. Let me show you the box. Wait a minute. Here is the top box. Middle box. And here is the top box. And the lower box is here. So you can see these are 3 lines and it tells you the box. Now it falls off and this green candle is Marbuzu. It eats this red candle. So you can again buy it. Right here. Now as you can see, it's now outside the box. So now you can make easy money substantially. Now it's again sell. So my concept is look for signs. Another thing to note is to understand what the market is trying to do. If you're looking at too many sell signals, then it means that there is something wrong. Now, what do I mean by sell signal? I mean by sell signal is lower highs. If I just zoom out, I will show you this is the first high, second high, third high, fourth high. But on the fifth high, it crossed these two highs. Now it's going straight. So it means if it crosses these two highs, a huge rally will be coming in. But if it fails, then it will get support on these lows. Now it's again red candle. So we will be like jumping out right here. And it again tells us to buy. Now the concept is always remember what the market is doing. Now if you look at it, it's again following the box theory. Right here, the top box and the bottom box is this blue line. This is the middle box. So you can see it's again in a box. Now you might ask, how on earth can you know when it will not be stuck in a box? Now the answer lies on the monthly scale. That what I mean to say is on the higher scale. If you're following a daily candle, then look for the weekly candle to find what is happening on the weekly candle. Now this is what, 2016? Sorry, 2006. Now if I turn to monthly chart and I move to 2006, right here, this is our buying thing. If you look at it, and if I zoom further down, just look at it. Right here we are trading, right? And it's what, 1, 2, 3, 4, 5, 6 months it's going straight. So if it is going straight, you and I cannot make money. That is like simple thing. No one can make money, because to make money you need the price to be like in a game plan, in a good option technique, in a good phase. Now if you looked at it, it was like dead for many weeks, 6 months. So how can we expect to make money? No, we cannot. But if I just show you, once it touched again this low, this blue line, let me zoom in further for you. This blue line, this was our lower box. If you remember, the top box, middle box, lower box. It touched the lower box again. And if you look at it, it's a kind of a U. Once it touched it, the price rose higher and then higher and then higher. And in the middle, once it like went down, you could have sold it and bought it again. Example, let's put our icons just to show you easily, because I know on cell phone devices it doesn't look that great. If you look at it right here, you will be making money. And it's after those 6 months. Those 6 months that I just showed you where the price was stuck on the monthly level. So if you find something that gets stuck on the monthly level, then understand. The point is, if something is stuck on the higher level, then on the lower level, it will be impossible to make money. And if it is impossible to make money, then you cannot do much. So what's the solution? The solution is wait for the box to end. And once the box ends, you jump in. So basically, you need to pick what is really happening. And that will mean to align all chart levels. Once you will align them, it will be easier for you to trade. Now, if you look at it, right here, we were having like lostable trades. We had no like get out way or like something to get out of. But once it went outside the box, it was easier to make money. Simply, our candlestick charts were working to the optimum level. Just look at it. Right here we bought, and right here we sold. Again, we bought. Now another thing to note, if you look at these two candlesticks, Let me zoom in. Yeah, this is a dark cloud cover. Sorry, not a dark cloud cover, but piercing line. Now, piercing line usually means a higher highs. But as I always say, the patterns tell you that this can happen. But usually the reversal pattern are at the bottom. And is this a bottom? No. So you will wait for the next candle. Now this is also a piercing line. But the difference is, if I just zoom out for you, this is the first bottom and this low is near that bottom. So you can expect it to rise. But this low is not near this low. This fall is not near that fall. This fall is near this high. So it helps you understand when to pick it up and when not to. Because the fall usually needs to be on the lows or below the lows, not on the highs. So any pattern which tells you that this is an engulfing bullish pattern or any pattern, if it happens on the low, then it will have far more power for the buying signal. Otherwise, it won't be that powerful. Now let's look at it further. It rises. This is also a dark cloud cover. But as I always tell you, yes, you will be looking at it as a high. But don't fall into the trap until and unless you don't see the next day's candle either opening lower or going lower or something like that. If you look at it, the next day it opened higher and closed higher. Now this doesn't look good. And it went up. This is a long-legged doji candle. This is also a long-legged doji candle. So it's telling you that the price continues to go higher. And this is also a long-legged doji candle. It continues to go higher and then it's an engulfing bearish candle. So basically for bullish candles, you will be looking at engulfing bullish, piercing lines, but all these patterns needs to be at a specific moment, because let me tell you once more, this is an engulfing bearish candle. Now this candle has eaten completely this green candle and it is at the top. Now if you remember the lecture, in that lecture I told you once it happens right at the top, it's an extremely bearish pattern. And that's exactly what happened. Just look at it. It did fell off. And now it's rising. Now another important stuff. Now although this course is about candlestick, but there are other patterns. Double top, triple top, and stuff like that. Those patterns are known as chart patterns and I have a separate course for that. But remember, chart patterns are also an important patterns. And if you merge chart pattern with candlestick patterns, then you will have an extreme firepower. Now what do I mean by that? Let me tell you. Let's just zoom out so that I can inform you that. Now double top pattern is one of the most powerful pattern. I would believe that it's one of the most powerful pattern. It's the extreme power that the pattern can have. And if you merge with candlestick, you will have an insight, or a whole new world will open for you. Just look at it right here. This is the first top, second top. This second top will reach either this high or will stay lower or will just go a bit up and fall off. Exactly that's what happened. This is also a double top. The spikes highs are near the first high. See, if we move right here, now it's following up. Let's see if the double top is made or it falls off. Now just look at it, this red candle. Now this is what I call importance. Now if you look at it closely, it somewhat mimics double top. First top, fall, rise up, double top, fell off. Now once a double top happens, usually the price does not recover. And if you look at it, the price is currently going straight and moves higher. Now the thing to note is every time, like in chart patterns, now this course is not on those chart patterns, but to explain you further, the rule is double top can convert into three top, triple top, but it cannot convert into four tops. The fourth high usually goes up, and if you look at it, first high, second high, and if I just place an icon, although we haven't bought it, but just placing an icon, this is the triple top. This green candle is the third top. So triple top and fall, and then it's going for the fourth top right here. And as I told you, fourth top usually doesn't exist, so it crosses up. See? And now it's falling off. Now the thing to note is it a double top? No. So it will come back up. Now, as you can see, again, the same thing is happening. In candlestick chart, first top and second top. Now, another important aspect. Now, this course is not about that, but I have to explain you. In the double or triple top, the basic fall, this fall should be broken after the second fall. Now here, it touched that and went higher. But it should have broken it to go further lower. And if I move down the path, see, it's double top, triple top, and now fourth top. So if you would have bought it right here, you would have made more money. But it goes down. Now these three candles were three black crows, and as I have discussed, three black crows, three white soldiers, three method bullish pattern, three method bearish pattern. The more the candles are involved, the more powerful that pattern is. And once it did that, that's a hell that's a hell pattern. And if you look at it, the price is now going further lower. Now the first target will be right here, 143, goes lower, lower, boom, it has even crossed 142. Second target is 140, it has touched that. And now a green candle has come up, so we can assume the price is again going higher. So the concept is candlestick are the powerful pattern. But if you look at it further down the can or further down the road, you'll find that mostly you will lose money on the double tops. Right here, it will be telling you to buy and you will get stuck. This is the first high. On the second high, you would have made money on this pattern, but not enough money. So either you are getting stuck, example on this second high, or you will be making small money, but not huge money, and it fell off. But if you would have bought it on the second low or on the third low, for example, this engulfing bullish candle, then you would have made more money. So basically, you need to find which pattern works for you and how it works for you. As the trading depends on understanding and through experience what is really happening. Now in this chapter, in this lecture, I have merged the chart patterns as well, so that I can show you how the double tops creates those lossable trade. Now if you look at it, the first top or the first rise, we always make money. Example, this high, we made money. Example here, we made money. Example here, we made money. Example here, we made money. But right on the second high, we were in problems. Example, this too could be considered a second high. We would have bought it. Right here, we would have made money, but not that much. Right here, again, it's that one. Now in the second top, if you find a seriously engulfing bullish candle, a big white candle, then there is concern a candle, it's a concerned candle, it's a doubtful candle, because usually in a huge rise, it doesn't make a big white candle. Now, right here, this big white candle made sense, but not. I will now discuss this pattern on the daily chart. Thank you.